Okay. Yeah, Vivek, I think we are live.
Okay.
Just let me quickly check. Yeah, it says going live. Just a moment. Yeah, we are live now. Okay, perfect. So welcome everybody. Thanks a lot for joining us on a Friday evening. Again, like every other month, for our Ask Me Anything session with Vivek and myself. So as you all know, Vivek is the investment head and the marketing head at Gulak. And we take all your questions, address all your concerns and queries by way of this session about Gulak and about financial markets, any questions that you may have about the markets. Now, let me quickly share my screen and take you through the agenda for the day. And post that, we will take your questions both from the form that you filled in with your questions in advance and from the chat box. So just stay tuned with us. Vivek, I hope my screen is visible.
Yes.
Perfect. All right. So we will be talking about ST and Gulak, the rebalance update, and then take your Q&A. As you all would already know, we are a pioneer of systematic investment management in India. We have been around since more than 15 years. We have our PMS products as well as retail products by way of Gulak. And we operate in 6 countries. Our portfolios are present in 6 countries. So Gulak is a retail investment advisory arm of ST that uses sophisticated quantitative algorithms to offer model portfolios to clients. This was started after our success of our PMS portfolios, where we thought that let us offer these portfolios which are doing well quantitatively at a lower ticket size to investors like you and me who want to start small. So happy to say that we have served 20,000 plus subscribers till date. Our numbers have been increasing exponentially since last year. And our strategy is all algo based and multi-factor strategy, which we have talked about a lot in the past. So today our focus will be to talk about more on the rebalance update and address your queries. So Sandeep, you must have seen him, interacted with him before. He's the founder and CEO of ST. He's a BTech from IIT Delhi and MBA from Columbia Business School, having 30 plus years of experience. Vivek Sharma, who's the speaker with us today, is the investments head, also an alumnus of IIT Kharagpur and has 20 plus years of experience. And myself, I'm Eesha, business manager at Gulaq, and I have 6 years of experience in consulting research in the financial services domain. Now, coming to the disclaimers, of course, like always, we are a SEBI-registered investment advisor, and it is our responsibility to make you aware of all kinds of disclosures in the market, and so that you're aware before investing in the markets, what are the risks associated. So the important disclosures are in front of you, along with the details related to our organization. This webinar is being recorded and is present on YouTube. So you can always rewind and refer to these disclosures or any other question that you may have missed in the process. This will be available for you. Okay. Coming to the rebalance update for the day, for the last month, for the month of April, as you see, our focus has been shifting more from small cap to large cap. So there is a tilt from small cap to large cap. Now, small cap is barely 5%, but our algos are still finding more opportunities in mid cap still. So mid cap is still growing a little, but large cap has seen a lot of increase. And the tilt has been from small cap to large cap over the years, if you see this calendar year and how the segment-wise distribution is. Coming to the sectoral allocation, if you have to compare with BSE, you will see over here, the BSE 500 updates are given over here for the month of April. So you would see that we are very bullish on healthcare, industrials, consumer staples, energy, but financials on which the index is very bullish, we are not so much present in that specific segment. Similarly, in IT and materials, we do see a good holding in the index, but our algo has not put in any money in these sectors. But that being said, this is a snapshot of our sectoral allocation. But like we always say, our algo does not take bets on specific sectors all the time. Like we look at all the sectors, all the factors in the market, and whatever is the best based on the current economic regime and the other factors at play, those are the sectors we put our money in. So you would see that it's never focused on one sector always. It keeps changing depending on the market scenario and the factors. A quick overview of the different gears and what gear basically means, because we did have a lot of new investors coming in the first quarter of this calendar year. So for all of you guys, gear is basically an analogy with the gears of a car. When you're driving on a plain terrain, the weather is nice, the road is clear, you will drive at high speed. You won't really slow down the gear because you can take that amount of risk. You think that the market is okay, and you can yourself also, you have the appetite to go ahead faster. So just like in cars, when you can take more risk, you go faster. Similarly, in the stock markets, we have gears. So highest gear means 100% equity, which is suitable for the most aggressive investors. Then as we reduce the gears, component of debt gets added and the risk appetite gets reduced. So we always recommend our clients to properly take the risk survey. Do not ignore it. Whatever it tells you, please go by that advice and do not invest in multiple portfolios of Gulak. Stick to one portfolio, which is as per your risk appetite, which will be given to you by the risk survey that you take. So this is a little bit about our gears and our methodology for all the new people out here. Now, a lot of questions are what we received, because our returns our portfolio did fall a little. In February, the market was a little volatile. In March also, we saw something of that sort happening. So just to showcase you what exactly happened, we did see almost a 7% fall in the market, in our portfolio, but you would see that at the end of the month, in the last month of March, we did close almost flattish as compared to the benchmark. So there was a slight bit of underperformance, but the recovery was also good enough. All that money was recovered quite soon. So that's what we keep saying. Despite volatility, the portfolio has a decent enough beta and a decent enough Sharpe. So you will see that we are able to make up for the losses. And it's always on the long term that you should look at the performance of our portfolio or any other portfolio. So if I have to talk about other gears, you would see a similar story. And just to let you know, the benchmark that I have taken for gear 5 and for subsequent gears is not the multi-cap only. We have created synthetic benchmarks. What that means is on small case, you will find only 100% equity. But that is not a like-to-like comparison. Our gear 5 has 80% debt and 80% equity and 20% debt. So the benchmark also has 80% of weight given to multi-cap index and 20% given to FDs. Similarly, we have created synthetic benchmarks to show you the correct comparison as regards the portfolio asset allocation. So these are the returns for gear 5. A lot of people had questions in our form on, what have been the returns. So this is the correct way to compare the returns. This is for gear 4, since it's live, gear 3, and a comparative analysis. Again, this is recorded, so you can go back and look at these at your own convenience. Of course, please note that investments in securities market are subject to market risks. So you should read all the related documents carefully, and you should know that past performance does not guarantee future returns. We do have questions on our expectations from Gulak portfolio, which Vivek will be talking about shortly. Because the returns that we've seen till date, especially in gear 6, which is the 100% equity, are of course not sustainable over a longer period of time. So we will be setting those expectations as well. Again, a slide which shows you how your money, 100 rupees invested at the launch of the portfolio, how it will be right now compared to how it would have been if you would have been in Nifty multi-cap index. Similarly, our performance, annual performance in each year since the time we have been live. Okay. Now, another question that we have been receiving quite a lot says that, what are the cost-adjusted returns and how do we figure out and understand our returns? So this is a snapshot from the small case website. Under the portfolio, you would see this specific action button which says view costs and returns. Once you click on it, you will be shown something of this sort. Now, if you can see my screen, over here, there will be cost-adjusted returns, and you can play around with the time period. So you will see, okay, what is your total investment, the original money that you had put in. In our example, we are taking 3 lakhs as the investment. Then what is the small case value? So this is specific for gear 6 that we have done this analysis on a capital of 3 lakh rupees for a year. And what are the returns like? So what accounting for all the charges, you have made 81% in the last year annualized. So this is for the last year till date. This is the analysis we did today for the last year of the performance of Gulak on 3 lakh rupees. So you would see that on top of 3 lakhs, we also have the subscription fee, which goes to ST. There are transaction charges, which goes to Zerodha. We have taken Zerodha as the broker. If you select a different broker based on whoever you are connected to, you will see a different price. So based on, you will also see how much the broker is charging. If you click on the I button, you will see a further breakup of what are the different kinds of charges the broker is charging you. So all this analysis is for you. Now, an important thing to consider is that this 81% is net of all charges. So this would be different from what you see on the website. On our website for Gulak Year 6 in the last 1 year, you might see a slightly higher return. So for all the people asking, kitne humko net of all charges, kitna return hame milega, this is what you can see. This is the past return. Again, future mein kya hoga, we have to have expectations accordingly, but at least you get a clear answer of what you've been looking for. Now, let me take you to an example of, one of the portfolios. Okay, this is an example that I'll take you to. This is actually a person's portfolio. This is a screenshot from the small case app. Now, you can click on this. You can go to the returns section if you are already an investor, and you will get a similar snapshot. What you see here is that the money put in is 19.8 lakhs. This is over a period of 3 years, different time frames someone has put in this money. What are the realized returns and dividends? They are visible over here. And what are the current returns? Sum of all these 3 items, the current returns, realized returns, and dividends, is giving you the total returns. So at any point in time, if you want to know that, hey, I invested 100 rupees 3 years back, but I've kept rebalancing, I've kept adding more money at different intervals. What is my current state of being? This is the answer. You see, money put in is 19.8 lakhs. Currently, total returns are 8.7 lakhs. So 8.7 over 19.8 will give you 44% total absolute returns. If you want to look at XIRR, which is return which accounts for the time when the money was actually put in, that is around 53.5% for this specific person's portfolio. Now, this portfolio is obviously subject to slippages, subject to other, if rebalancing is not done in time, and the different times at which the money was put in. So all those things obviously come into account. The broker used, etc. If you want to know what current investment and current value means, that's basically, if you see over here, current investment is something that you put in right now. So then at the last rebalance, what was the buy value plus anything that you would have bought that has not been sold till now. In the last 2 or 3 rebalances, your current investment, on which you can see the current value is over here, and these were the returns. But for anyone looking to figure out the returns from the very first time the money was put in, please refer to money put in and total returns. This will help you out. I hope this is clear, and happy to take questions pertaining to this. Okay, latest blogs. So Vivek, I would hand over to you to talk about the latest blogs we've published, and then we can carry on with the questions as well. Just a moment. Let me stop sharing my screen. I hope my screen was visible till now, right?
Yes, obviously. Yeah.
Oh, perfect. So I'm stopping screen share. Just a moment. Yeah, Vivek, you're the host now, so you can share your screen.
Okay. Let me know if my screen is visible.
Yes.
Just give me a minute. Yeah, so we have published 2 blogs recently. One is about the PPF. Today was not today, but rather tomorrow is the last day before you can put in money and still get the whole interest for the whole of month. So there were a lot of articles, lot of posts on the social media about this specific, and we also given our take. Basically, the difference it makes is if you put the whole ATC limit, which is 1.5 lakhs, in PPF before 5th versus after 5th, the difference it makes is for the whole of year it's around 888 rupees. That's the difference it is making. So it is really it is not substantial, right? So this is making some difference, but it is not really a big deal. And many people were really, without realizing what is the gains and how much is the profit you will be making, they were just without realizing all of those things, they were investing. Uh, and this is by no means, we are not trying to say here that PPF in itself is a bad product. It's a very good product to invest in, but just be aware of, or just be aware of the things, just be aware of the benefits versus the cost that you are in these kind of investment products. So this is the blog that we have written. And another blog was on active investing. Again, last 1-2 months we have been underperforming, and it's been really hard for investors, especially those investors who have come in recently in last 3-4 months. And there are other investors like Eesha shared the PNL of one of the investors who have been with us for almost 3 years. And this investor, we know, I know, hasn't been very consistent, hasn't been very disciplined, but still you can see that over 3 years have made pretty good returns, right? But for investors who have just come in, it's been really hard, and we written our views on why active investing becomes hard, because many of you are now questioning that my Gulak portfolio is in a loss or it's underperforming, and what should I do, right? So this is our take on it, and I'll encourage everyone to go to gulak.com blog section and check out this specific blog. Now let's move on to the Q&A section. We got, again, like every time, got quite a few questions. We'll quickly cover this, and then we'll move on to the questions being asked currently in the chat. So first set of questions is around the methodology, right? Gulak Gear 6 performance is outstanding. Can we expect the same, or it will provide more? Okay, dil mange more. Any new algorithm or testing was made for better performance? So yeah, so the second part is, obviously we keep on, our research team is always trying to make our algorithms better, whether it's from the risk side, how can we reduce the risk, or how can we improve the performance, so, or how can we even reduce the churn rate. So that is an ongoing process which is always happening. Should we expect more? I don't think we should expect more. And this is what I've been saying for the past few months at least, that the biggest risk I see to the investors is not anything but they themselves and their expectations. And when I talk to the investors, their expectations currently are through the roof. And what we have been saying is, in equities, you really can't expect uh, this kind of returns that we have seen in last maybe 2-3 years forever, right? This will obviously normalize, and over long run, equities maybe can give 12 to 15% returns, which is in itself very, very good. And if you talk about my personal expectations from Gulak Gear 6, I always say maybe after cost brokerages, transactions, fees, maybe 6 to 8% of alpha over that. So roughly around 20%. If we are able to deliver that, it will be a huge performance. And this, I'm talking about slightly longer term, which is say about 10 years or so. So that's the kind of expectations I personally have. Yeah, that's what I can tell you. Again, we can't promise anything. And yeah, we can't really promise these kind of returns. Do you have any product that uses quant strategy in debt fund? So as of now, we don't have, but yeah, we have plans to introduce mutual fund portfolios also, because what we keep hearing is almost everyone is of our investors, and a much bigger pool is actually investing in mutual funds, and they're looking for help in how to invest in mutual funds. So, and that category will also be a part of it. So we do have plans to it, but not in the near future. But yes, we do have plans to offer these kind of portfolios. Now, whether they'll be purely debt or whether they'll be mixed, balanced funds, like a combination of debt and equity, we don't know that yet. But we do have plans in specifically in mutual funds, right? Gulak Gear 6 follows directional strategy. How is it different from momentum? Yeah. So like we have explained in the earlier webinars also, ours is a multi-factor model. So momentum is just one of the factor, and it gives very good returns when the markets are moving up. But at the same time, it is slightly risky also if the markets are moving down. The losses from this specific strategy on focusing on only on one on momentum is risky, right? We follow a multi-factor strategy. We not only follow momentum but value, quality, low volatility. These are all the different kind of factors that we follow, and obviously we do have fundamental factors and macro factors as well. So ours is a much more broad-based, much more well-rounded strategy, whereas momentum is just focusing on one. So at times when the markets are going up, momentum would perform better than our strategy because ours is a more diversified strategy. But in the long run, we believe ours, because it is more diversified, it will give you better risk-adjusted returns than momentum strategy. Okay, next question we have from Saurav. What time frame does algo consider while capturing stocks for the month? Is it daily, weekly? So I think what you are asking here, Saurav, is more around the backtesting part. What's the time frame we do take into consideration? And here it's dependent on the factors. So in the previous question, as I was explaining you, we look at the multiple factors. There's a list of more than 100 factors that we consider at stock level and at sector level. And for some it is daily, for some it is weekly, and for some it is actually monthly also. So it depends on factor to factor. Yeah. For the next 1 to 2 years, which are the sectors Gulak is focusing more on? So yeah, we are not focusing on any specific sector. Frankly, if you ask me, I really don't know which sector it is going to be. But where we are focusing on is designing our algorithms so that if the move is in real estate sector, we have good allocation there. If it is in IT or financial sector, we have good allocation there. So these algorithms that we are developing, they are auto-correcting or auto-adjusting in nature, so that wherever the action is happening, wherever we find more value, we shift our focus there. When we say we shift our focus, the algo gives more allocation in our portfolio to that specific sector. So we do not like to predict anything, but because our algos are self-correcting and self-adjusting in nature, we believe we will be in that specific sector wherever the action is happening. And it's not also very in the sense that if some sector starts moving right now, there is some lag, obviously, right? Because in the previous question, as I said, that there are a few factors in which we consider weekly or even monthly data. So it takes time to adjust, and we might be slightly late to the party, but yes, we do have a decent allocation to it. And as we have seen even in last year, initially we were slow to react. Our algos took some time to move to mid and small cap, but we were able to capture a very good part of that move. And similar is the thing happening right now, where we are seeing the allocation shifting from small cap to large caps, right? So no specific sector, no specific market cap where we are focusing on, but the research or the algorithm will take care of these things. Okay, next is again around methodology. In case of volatility, do you hold cash? No, we do not hold cash. And like Eesha shared earlier, the way we reduce risk. So when somebody says you should hold cash, what they mean is you should reduce the risk. And the way we reduce risk is moving into the safer sectors and safer stocks. And that is what is happening also currently for the last few months, that we are shifting the allocation from mostly small caps to large caps. That shift is currently happening, and that's how the risk is being reduced in the portfolio currently, right? Mid and small caps are comparatively more expensive than large caps compared to their historical averages. If need be, can there be time when Gear 6 has 100% large cap? I don't think we have seen ever that 100% of the allocation is in one specific category. But having said that, it could definitely happen. Currently, in small caps, we are at 5%. So it could happen that if we continue that trend, small caps might have 0% allocation and 100% is into large and mid caps. Or 100% could as well be in, say, any two categories, but just one category having 100% of the allocation. I really haven't seen that ever, and we can go back and check this data also. But as far as I remember, this has actually never happened, 100% in one specific market cap. Okay, do you consider major events like election-wise selecting stocks, maybe a quant model that does not look into those, but having some human intervention? Yeah, again, see here, what our strength is not into human intervention. Our strength is none of our team members actually uh, do this kind of analysis themselves. Where our strength is as a team, our strength is analyzing the data, making those, using that data to create those portfolios. So making rules around how do you use the data, how do you analyze that data better. And that is what algorithms is about. So that's where our strength is. If we start doing if we start picking stocks or sectors or start any sort of human intervention based on our views of the market, I think we are not, we really don't want to do it, and that is not our strength. And that is frankly not what you expect us to do. That is not what you are paying us to do, right? So that is something that I don't think we'll ever do. Human intervention, that's not our strength. And we want to stick to where our strength is, which is looking at data, designing rules, and then picking stocks on the basis of the analysis, right? So this we'll never do, but see, whenever this elections are happening, whenever the results are coming out, the impact of that we are going to see in stocks. And whenever stocks are moving or specific sectors are moving, our algorithms are going to pick up that specific stock or sector, because we are also studying all the volumes and FNO data and also the price data. So that will get reflected whenever we do rebalance next, right? So the impact of it will get rebalanced, but we are not going to take any human intervention in our stocks or in our portfolios.
Right. Vivek,
Return,
can I request
yeah.
you to take a couple of questions from the chat box, which are somewhat related to our methodology, since we were on
Yes,
that?
yes, sure.
Okay. So Rovil Goyal and another person had mentioned in the beginning something that people have asked earlier also, that you haven't given time for stocks to perform well for at least 2 months. I've seen that some stocks are performing well, but I have also sold some stocks in losses in the April 24 rebalancing. So why did you
Yeah.
get other stocks?
Okay. I think I also read some similar comment around those lines only.
Right.
So see, this is I can explain it a bit, but yes, we'll definitely do take into account what is happening and how can we improve. But this is actually happening because of the data we are looking at. So in the previous question, we were talking about, in one of the questions we were talking about, what's the time frame we are looking at, right? So what is happening is, let's consider these three time frames: daily, weekly, and monthly. If we are looking at a smaller time frame, which is more frequent, daily time frame, what is going to happen is any movement that happens in the, let's say, stock price will get captured very fast. So if it is a right move, if the stock has started moving up, we would capture it very fast. But many times what it happens is it is a fake move, which means it will just go up, and as soon as you have entered that, it will come down, it will correct. So it is much, if we are considering daily frequency, it is very, very sensitive. So if the move is right, you'll be in that stock much earlier. But if the move is wrong, you'll get captured, or you'll actually lose out because of that higher frequency, because of that sensitivity, right? Versus if you're doing a weekly, right? In weekly, what will happen is, just because the stock has moved a few days, it won't be captured. When it has moved for a few, maybe 1, 2, 3 weeks, only then in a weekly basis, it will get captured. So you are at times slow in capturing that move. you'll be entering late, but you will be more sure about that move, right? Because if it actually falls down within few days, you won't be able to enter in it. So there's a trade-off between how do you which specific frequency do you use, right? And that trade-off we have tested for years of data, whether daily, weekly, or monthly makes sense, or which specific frequency makes sense. And we have seen about 10 years of data, and then we have figured out what works best in the longer run, right? Uh, and when we say what works best in the long run, means there would be times when it really does not work well, but there would be other times where it has outperformed. So overall, if we look at the longer term returns, that should be optimized for long term risk adjusted returns, right? So in this case specifically, what would have happened is obviously it has not performed well. Our algo has not performed well, and that's why we have seen last 2 months we have slightly underperformed. And this is a matter, and that's why we are seeing these kind of things that we actually entered, or when we exited, the stock move, or when we entered, the reversal happened. So the point I'm trying to make here is overall the algos that we are optimized, they're optimized to produce the best returns over a longer term duration, which means those strategies might not work in smaller time frames. It could happen. Like last year also, there were few months where we underperformed. This year also this will happen, right? And the job that we are doing is whenever outperformance or underperformance is happening, we go back and we study what is happening, what is causing. So it's not really a black box. Many people think algos to be a black box. It's not really a black box. And we are actually studying the attributes, why, how, or why we are able to produce those returns, or why we are underperforming. And we keep on researching how can we use this newer data, how can we improve our algorithm. So that process is always ongoing. And just be rest assured that whatever new data has come in, wherever we have underperformed, we are actually looking into it and how can we outperform, or how can we use this new information to make our algorithms better. But having said that, I think our expectation that we are always outperforming or we are always picking the right stocks, that is not going to happen.
Right.
Out of 10 stocks that we pick, there'll be maybe few where we'll actually lose out also, right?
Yeah.
So the way to study this is obviously looking at slightly longer term data and then making your conclusions.
Right. And I think just to add to this, like you said, the new data has come in. So so the algo has identified at the end of the month a new set of stocks which it feels are better. So by not pulling out the money from the previous month's stocks and putting in the new month's better stocks that the algo feels we are losing out on certain opportunities.
Yeah.
So whatever is the advice, we go ahead and we implement it. And that's why even if we have to come out in losses, it could be that the algo has identified there are better opportunities, and staying in the existing one would make you lose on additional money that you could have gotten.
And investing is a game of probability, right? So when we are saying this is a better opportunity than where we are exiting from, again, what we are saying is this has more probability. It does not mean it will outperform 100% of the time, but we see based on the historical records, this has better probability of producing better returns. And with any probability, the chances of that happening are more, but it's not always 100%. Yeah. Okay, so Dipanshu has written, I'm a happy Gulak client. I understand that even the best of funds can underperform temporarily, so I'm not worried. Okay, thank you, Dipanshu, for your trust. And and the next is Bhavya. The returns for the past 2 months have not been good. What is the reason? Again, our algos haven't performed. That's the reason. And this will keep happening from time to time. We would underperform. But Bhavya, what I would encourage you to do is look at slightly longer term returns. It's always good to look at maybe 6 months or 1 year returns and then decide whether a specific strategy is performing or not performing. So this is just normal in the larger scheme of things that we are underperforming in 1-2 months. During last month's correction, the drawdown of the fund has been more severe than the market as against the stated objective. Yeah. So, Sushil, here, what you have mentioned here, that the stated objective of the fund is lesser drawdowns. That is not the stated objective. And I think I'd like to share one of the charts here that we have shared earlier also. This is the chart of the maximum drawdown since the inception of Gulak Gear 6. And we have shown this that even in 2022, where we saw stocks correcting, here it was kind of similar. The market fell about 18% and we fell 20%. So this was in line. And this is what our expectation is, that whenever markets fall, we would be in line. But there have been many cases where we have not, where Gulak Gear 6 did not fall as much, or where it has fallen slightly more. Like in case of 2023, initially beginning, if you see Gulak fell about maybe, this is 13% versus index fell about 11%. So here we have had more drawdowns. It's not substantially more, but it is more. Even here, the markets are not falling at all, maybe 1 or 2%, but we fell 5%. So there have been definitely cases. So the objective of the fund is definitely we are not saying that we'll have lower risk or higher returns, right? That is something that we are trying to achieve. But as we have talked about returns, we can underperform at times. And same is with drawdown also. We can have higher drawdowns. We expect that it will not be as severe, but this time slightly, I think the kind of underperformance was about 6-7%, maybe about that. And we have seen similar things in the past. So yeah, these are pretty normal, and we have seen it in the live performance also. We have seen it in the back test also. Okay. Yeah. During last month's correction, okay, this we have already addressed. Current CAGR has been 60%, but is it sustainable? I've already answered. This is not sustainable. The CAGR we are seeing is from the COVID lows, and that's why this is phenomenal. There's no way this can be sustained either. Uh, Whether you look at the BSC or Gulak Gear 6, the kind of returns that we have seen in last 3-4 years, no way you can get it in the next 3-4 years. I don't think that is sustainable. Having said that, I think even 15-20% returns that we always talk about, if your portfolio is able to grow at 20% CAGR over next 10 years, you can do the math. It will be huge wealth can be created if you keep investing and stay invested. What should be the expected CAGR? See, my expected expectations, I think I've already told you. From Gulak, my expectations are about maybe 20% equities over next 5 years. The general range, which is 12 to 15%. Yeah. With multiple rebalanced, it is difficult to know the total investment and profit we made. I think this has already been covered by Eesha in the earlier part. So if you have just missed this, the answer to this, Shubham, you can just go back and look at the initial 10-15 minutes where Eesha covered exactly how you can analyze your returns, whether it's total returns or the XIRR. Yeah.
On the returns bit, Vivek, I can maybe take one question which is related to this question or this specific question.
Yeah.
So, Jacob is saying that he has been investing with us since September 2023.
Okay.
His current returns are 5%, but the total returns are 12.05% without transaction charges, and there is an underperformance. So
Yeah.
I was just checking what has been our returns since September. So if we
Yeah.
look at the last 6 months, it's around 29% as per the small case website. So I would like to urge Jason to, go to the cost calculator, which we had shown that this is not without charges, by the way. What I had explained, what I had taken you through the total returns and the money put in, this is all after all the transaction charges because these are your actual returns. So we see that we have made the reported returns are 29%. Of course, there would be some transaction charges, fees, etc. of the broker as well. But the impact is quite a bit. It's more than 50% in your case. So this shouldn't be, this can't be right unless the rebalancing, let's say, was not done in time. Or let's say you have put in money in between from the last 6 months. If you are
Yes,
looking
even
at,
that.
so what we see is money put in versus the total returns when you see, that will give you an absolute return. But you should look at XIRR, which is the return weighted as per the time period of each capital amount that you have infused.
Yeah, but Eesha, in this case, we won't be getting the XRR
Yeah,
because
yeah.
it's less than a year.
Less than a year. So
Yes.
small case does not report the XIRR for less than a year. So there are multiple factors at play. The actual returns are 29%. And if you want, we can help you with the analysis. You can write to us at support@gulak.com. But I would
Another
urge you to
reason,
check what, yeah, Vivek.
another reason could be that his portfolio size is smaller, in which case, let's say if somebody has invested just 25,000 rupees,
Right.
right? And he has paid 2,900, right? So he's already paid more than 10%.
Yeah, that's correct.
That's why we say, I think one of the questions was also around the minimum investment size. What do we recommend? And I think what we have been recommending is at least have around 2.5 lakhs or so. See, ideally, your fees should not be more than 2% of your AUM, right? So if our fees is 5,800, so that means 5,800 into 50, which is 2.9 lakhs. So closer to 3 lakhs is what you should have. Then it will make sense. If you have AUM below that, best is do a SIP or one-time investment and try to take it as close to 3 lakhs as possible. And the more it is, the better it is for you. So if you have invested 15 lakhs, this will be less than even half a percentage point for you. So
Right.
the higher it is, the better.
So Vivek, Jacob has a follow-up. He's saying he's invested 9.5 lakhs. So then this much of
Okay,
a
this is, and
does not make sense.
yes, you should definitely write because this is a huge difference.
Yeah.
And if you've done that one-time investment and still getting those returns, I really don't see why would that be the case.
Yeah. So either you've done multiple investments in the period of last 6 months, or there has been a delay in rebalancing. There could be multiple reasons. And the transaction charges, of course, you should look at the cost and returns calculator that we were talking about initially. So, and of course, you can write to us. We will be happy to discuss.
Yeah. Sure. Okay, shall we move ahead, Eesha? Or any
Yeah,
specific?
there are a lot of questions, but yeah, we
Quickly
will
take
take them.
these and then okay.
Yeah, sure.
In multiple rebalance, it is difficult. Okay, this we have already answered. रीबैलेंसिंग क्या रीबैलेंसिंग मंथली या नीड बेसिस पे होता है? सो राकेश, ये हमने पहले भी आंसर एक बार किया हुआ है, तो हमने ये चीज चेक की हुई है. तो हमने अपने बैक टेस्ट में एल्गोरिदम्स में यही एक तो मंथली रीबैलेंसिंग की जगह हम अगर जब भी नीड है तभी हम रीबैलेंस करें. वी हैव टेस्टेड दिस आउट और ये बहुत अच्छा काम नहीं करता है. अगेन ओवर अ लॉन्ग रन ऐसा हो सकता है कि किसी एक स्पेसिफिक साल इसने बेटर किया हो मंथली रीबैलेंसिंग से, बट अगर आप थोड़ा सा लॉन्गर टर्म देखते हैं तो ये बेटर अप्रोच नहीं होती है. कुछ कुछ केस बाय केस बेसिस पे भी हो सकता है कि किसी केस में ये नीड बेस्ड बैलेंसिंग बेटर वर्क कर जाए या किसी मंथ या किसी क्वार्टर, बट लॉन्ग टर्म में देखा जाए तो दिस इज नॉट अ बेटर अप्रोच. फिक्स्ड मंथली रीबैलेंसिंग इज अ बेटर अप्रोच. तो ये हमने बैक टेस्ट किया हुआ है एंड दैट्स व्हाई वी आर फॉलोइंग मंथली रीबैलेंसिंग. The government results are out, would be out on 4th June. Will it be a good idea that we rebalance after the results? Okay, this is something that we can consider. We will definitely discuss it internally, and if we feel we want to do it, we would definitely delay it. See, but the point here is the results are coming out on 4th June. I don't know, 4th June is what date it is? June. 4th June is Tuesday, right? That's the second working day. So instead of third, we won't obviously be doing it on fourth. Fourth को results आएंगे तो we'll actually be doing it on 5th. But as we have discussed earlier, the data that we look at is in days, weeks, and months, right? So most of the data that we look at just by that one day of movement, it really won't change anything, frankly. So there's no, I frankly don't see any reason why we should do it on 4th or 5th, uh, because it's not going to make much of a difference really in one day's movement, right? So, but still we'll discuss it internally. But my initial view is it's not going to really impact. It can as well be on 4th or on 5th, not really a big impact because of just one day's movement. And whatever the results are, uh, it will impact the stocks and sectors, and anyways it will be captured in June and rebalance, right? But we'll still discuss it. If we feel this is the better strategy for some reason, we'll do it. Okay.
And on this, Vivek, do you think that whatever the results may be, a lot of it could already be factored in the prices of the stocks in advance? Because
Yeah, yeah.
there's so many parties who are associated with the with what's happening behind the scenes. So a lot of anticipation of the result would also lead
Exactly,
to
exactly. So we have
things being
already
factored
seen that
in.
that's what our view is. Again, we don't let our views come in way of portfolio construction, but at least my
Yeah,
view is a lot of it is already built into the price.
yeah,
So not really much of an impact.
yeah. A lot of
At least I
theories.
can't think of any reason why we should do it one day later, but we'll discuss. And if we feel that's a good idea, we'll do it.
Right.
And thank you for the suggestion. Can you share a rebalance document with high-level reasons why some stocks are added or removed? Okay, Lavina, I think this is something that we should do. We can go back and discuss. See, most of these reasons are the high-level reasons. I think you understand because most of it is data-driven. The reasons are going to be in numbers. But we'll see if we can present the story behind those numbers. Only then it will make sense. Because if we are just putting out raw numbers out there in front of you, it really won't make sense to you. So let us see if we can make some sense out of it so that most of our investors can understand these reasons, what is happening. We'll definitely do it. So this is something that again I'll note down. And if we are able to present, so if we are able to do it in a good way, in which we can help you understand what is happening, we'll definitely do it. Yeah. What's Gulak Gear 6? An investment or trading? If it is more of a trading, can't we rebalance when certain stock is losing steam? Again, Shubham, the problem with this is one is the one-off rebalance, which I've just answered. Key one-off rebalance really does not make sense in the long run, and it is definitely investments. So if you talk about trading in the short run, you would expect to make money in trading and make use of those short-term movements. But it is really investments, and that's why we say it is long and it is long only investment. I think the difference is also that in trading, you would want to take either a long view or a short view. It is investment. So if you are putting in money in Gulak Gear 6 for short term for a few months, I would encourage you not to do it. It is meant for somebody who is looking to make money from equities over a long run period, right? For rebalancing of stocks, how to identify momentum stocks at the time of rescheduling. Okay, so again here I think what we are the way we are studying these stocks, we don't see only one factor. So what happens is there are multiple factors, and then a consolidated scoring comes out for each of these stocks. So there's a consolidated score, and for some it could be much more of momentum and less of value and quality, and at other times it could be more of value or quality and less of momentum, right? So at your end, you won't be able to do it. At our end, maybe we can do. And again, as I've said, that if you are able to share the reasons or high level ideas about what is happening and why one stock is going out or coming in, we would do that. After we get rebalancing update, what time of the day is right to execute the rebalance? Equal weightage क्यों नहीं है? Equal weightage इसलिए नहीं है. Again, कुणाल, एक बार स्टॉक सेलेक्ट हो जाते हैं तो हम उसको ऑप्टिमाइज करना चाहते हैं फॉर रिस्क एंड रिटर्न्स. ठीक है. Equal weightage एक तरीका है पोर्टफोलियो बनाने का, and we have actually tested it, and our way, the way we are giving weights to these is a better way, and again this has been tested over a long run. इसीलिए हम equal weight नहीं करते हैं, हम weightage देते हैं just to optimize for risk and returns. And what time of the day is right to execute? I think if your portfolio is relatively small, I would say less than 5 lakhs, you can do it at any point of time in the day. But if it is more than 5 lakhs, look for, you would want more liquidity, ताकि slippages come हो, which is either in the first 1 hour or last 1 hour. So these two are the times when, if your portfolio is larger, I would recommend कि आप first 1 hour में करो या last 1 hour में, just that so that slippages are not high if the portfolio size is larger. I want to invest some lump sum amount as I have some more savings. Should I invest now or wait for next rebalance? I think ये rebalance already हो गया है, and we have answered this. Lump sum always, not always, but lump sum, again, it's a game of probability, and lump sum have more chances of working because equity markets are drifting upwards most of the times. So if you have money, you should not wait. If it is slightly larger sum, maybe you can divide it into 2 or 3 equal parts and put it over next 2-3 months. So yeah, I have 5 small cases in 5 mutual funds. All are in top quartile. I quit stock investing on my own after realizing I'm underperforming. I do SIP in each. I'm on right track. Yeah, Dipanshu, I think this is our advice to more than 95% of the investors. They should really not do stock picking on their own, right? It is very, very time consuming, and most of the investors actually do underperform. So I'm glad that you have realized this thing. You have been able to do that sort of analysis and figured out that you are not unable to do that. And it's a good thing to do. I think I do SIP in each. Yeah, I think this is a very good thing. This is what we have been recommending. Again, it's not that here I'm recommending small cases and mutual funds. If somebody is not comfortable with, say, small cases, and you just want to focus on mutual funds or just want to focus on index funds, this is fine. But what I'm recommending here is don't do stock picking on your own.
Right. Vivek, one question over here, since he says he's invested in 5 small cases and 5 mutual funds, do you think this is quite a bit of diversification happening, and the number of products in at least one segment should be restricted to 3 or 4?
Yeah, I think it's slightly on the higher side.
Hmm.
It would also depend, maybe if the portfolios are larger, in that case, maybe you might want to select few more funds. But in the average portfolio size that we look at, this is slightly on the higher side. Again, the point, Dipanshu, you should see is, in case of mutual funds, slightly higher, but cost is not an issue because they are charging on the basis of the size. Most of the small cases charge on the basis of fixed cost. So you should go back and check whether you are paying in any of these small case. If you are paying more than 2%, the lower it is, the better. But if you are paying maybe more than 2%, that's not the right thing to do. Right? So you should maybe increase your small cases and put more in each small case. That's what you can do.
And also the number of small cases and total number of mutual funds.
Exactly. I think total you can reduce a bit if the overall portfolio is not big. If the portfolio is really big, maybe this is okay. 10 is still on the higher side. Yeah. मैं अपनी पूरी इन्वेस्टमेंट्स गियर 6 में करना चाहता हूँ. Don't do it. बट आपने कहा है कि एक स्मॉल केस में 30%, या एक फंड में, इट्स नॉट एक स्मॉल केस बट एनी फंड, भी म्यूचुअल फंड में पैसा लगाना है, तो क्या मैं समझूं आपके स्मॉल केस में 100% एलोकेशन करने से रिस्क है और आपको रिसर्च पे कॉन्फिडेंट नहीं है? सी, दिस इज व्हाट आई हैव बीन एक्सप्लेनिंग, हिमांशु, कि इन्वेस्टिंग एक प्रोबेबिलिटी का गेम है. लाइक व्हेन यू आर रोलिंग अ डाइस, आपके पास 1 से 6 तक कुछ भी आ सकता है. ठीक है. तो यहाँ पे भी प्रोबेबिलिटीज हैं। एक डाइस जब आप रोल करते हैं तो आपको 1 से 6 आने की इक्वल प्रोबेबिलिटी होती है, राइट। यहाँ पे ऑब्वियसली स्टॉक मार्केट ऊपर जा रहा है, हम काफी रिसर्च करके स्टॉक सेलेक्ट करते हैं, तो हमारे पोर्टफोलियो की या ओवरऑल इक्विटी मार्केट्स की ऊपर जाने की प्रोबेबिलिटी ज्यादा है, बट अगेन इट इज अ प्रोबेबिलिटी। अब मैं आपसे ये शेयर करना चाहता हूँ हिमांशु की द वर्ल्ड्स बेस्ट इन्वेस्टर दैट वी ऑल नो, वॉरेन बफे, he has said that after his death he want his wife to just invest in passive funds, all his funds. So that is what he has been recommending, right? So it's again एक probability का game है. I personally also invest in mutual funds, right? So I would never recommend anyone to invest, put 100% allocation. It will be a risky thing to do, ठीक है? Because अगर हमें इतना कॉन्फिडेंस होता कि ये आउट परफॉर्म करेगा ही, तो आई वुड ऑल्सो पुट एवरीथिंग एंड वी वुड पुट एवरीथिंग, बट वी आर नॉट दैट कॉन्फिडेंट। द कॉन्फिडेंस इज देयर, 50% से ज्यादा कॉन्फिडेंस है। ईशा को मे बी 80% हो सकता है, मेरे को हो सकता है 75 हो, किसी और को कुछ हो, बट वी ऑल हैव डिसेंट इन्वेस्टमेंट्स गुल्लक में। 100% किसी की नहीं है और किसी में भी नहीं होना चाहिए। नो मैटर हाउ गुड एन इन्वेस्टर वन इज, I would not put 100% money there. So we are confident, but we are not sure.
Yeah.
That's what I would say.
This is another question, Vivek. 2 or 3 people have asked, why should I not invest more than 25%? So
See, it
now,
can go higher. See, the risk is there. हम जैसे बोलते हैं कि 3 or 4 funds हो तो that is good enough. तो 3 funds में maybe you can go to 33. That's the broad range. किसी को थोड़ा सा higher risk लेना है तो वो 35-40 तक भी जा सकता है, ठीक है। But what one should realize is कि जितना वो ऊपर जा रहे हैं उतना रिस्क बढ़ता जाता है। अगेन विद रिस्क ऐसा नहीं है कि वो लॉस ही होगा, रिस्क इज कि हो सकता है अगर आउट परफॉर्म करते रहें तो that would have been a wise decision, right? It will turn out to be in their favor. But अगर अंडर परफॉर्म करते हैं, जो कि हो सकता है अगेन, तो it will be a bad decision. So a right decision is, see, you don't want to rely on luck too much, right? While investing. So wise decision is, if somebody you have confidence on, give it higher allocation. Obviously 100% is too high. अगर आपको लगता है 25% कम है, आप ज्यादा कॉन्फिडेंट हो और थोड़ा सा ज्यादा रिस्क लेना चाहते हो, तो मे बी इंक्रीज इट टू 35 or 40, right?
Yeah, just say age old saying, do not put all your eggs in one basket. So another question, Sudhanshu says, I want to invest 80% of my PF into equity and 20% into debt. Total size of PF is 1 crore. Should I invest all my equity in Gear 6? So that is something we have already told him कि नहीं करना चाहिए. And then there is our PMS product if he wants to look at it.
Yeah, I think one of the questions we also got was around, Mr. Amit has written ki earlier webinars you mentioned that you have reached beyond 50 lakhs, one should look for PMS. As a long-term investor, I expect my investments to grow in multiple crores. Hence, I don't get the concept of maximum threshold. Yeah, see, the maximum as a strategy, बिल्कुल maximum threshold नहीं है ऐसा कुछ. The markets are big enough, our fund is still small, so there is no maximum threshold, concept of maximum threshold. Only concept is कि when we are rebalancing on small case platform, the way rebalancing works is you are paying, the slippages could be high. So the execution is not optimized, right? And if that fund is big enough, like 50 lakhs your return, then the execution is not optimized. So you'll end up paying a lot in slippages. तो अगर प्राइस चल रहा है 100 और आपने बाय किया और वो 101 हो गया प्राइस, तो वो 1% का स्लिपेज है, राइट? Whereas in PMS what happens is we have our own execution algorithm और हम एग्जीक्यूशन बहुत ही कंट्रोल्ड तरीके से करते हैं ताकि स्लिपेजेस लीस्ट रहें, ठीक है। देयर स्टिल बी स्लिपेजेस बट वो बहुत ही कंट्रोल्ड रहती हैं, एंड दैट इज व्हाई वी रिकमेंड कि इफ समबडी इज एक्चुअली इन्वेस्टिंग लार्जर सम्स ऑफ मनी, a much better way is through PMS because the execution is controlled. Otherwise, there is no concept of maximum threshold, right? Yeah. how much minimum amount to deploy for better results? I think we have already covered. Closer to 3 lakhs is the answer. I have 12 lakhs mutual fund portfolio. I have a couple of questions. Should I stop SIP in mutual funds and start SIP in small cases? Should I exit from mutual funds and reinvest money in small? Yeah, again, excuse me. Raghavan, the answer here is it's always good to diversify. So if you're not into any small case and if you feel you understand one small case and you want to invest in one or two, you can definitely invest. But I don't see mutual funds has its own advantages. You don't need to rebalance monthly. You can invest as low as 500 or 1,000 rupees. So it has its own advantages. And small case has its own advantages, right? So I won't recommend you to stop mutual funds and shift everything to small cases. But you can, if you have mutual funds, you can maybe the new money you can deploy in small cases. So if you like a small case, yeah, do go ahead and take some exposure there, but don't shift everything to small cases, really. Okay. Yeah, I think we have covered all the questions that we got. Eesha, if you see any specific new questions that we haven't covered, we can take that.
Yeah, Vic, there are quite a few. So let me start. Now, one person is asking how many members are there in the team of Gulak? Shiva.
So Gulak ST is more than 100% team. So again, Gulak is not a separate company; it's a brand, and we are employees of ST, and we have marketing, we have tech team, we have the research team. So everyone is actually working for Gulak. Obviously, there are other things also that we are working at for, but so yeah, about the company, we are more than 100 people strong. It's been more than 15 years we have been doing this stuff. Obviously, the Gulak portfolios are about 3.5 or 4 years old, but as a quant-based investing and trading, this we have been doing for almost 15 years now.
Right. And he's asking if there is any group meetup planned in Bangalore in the near future.
Okay, not immediate plans, but this is, I think, we have been thinking about doing in other cities because we have done 2 meetups in Gurgaon, and because we are based in Gurgaon, that's why we did it in Gurgaon. But yeah, we have got we've got quite a few customers in other cities, and this is something that I think we should plan. Yeah, so we definitely plan out in other cities also.
Sure. So Shiva only is asking if there's a way to get Google Calendar invites for the AMA YouTube sessions. This will help to remember. So I would say that one, you can, whenever you get this email, you can set a notify me or like a calendar invite for YouTube. It's like a notification that YouTube will send you if you've already clicked on that button. And this is a good advice you've given. So we'll consider it and we will see if it's possible for us to make that happen.
Yeah.
Along with the emails. We will do that. Okay, now. Okay, so again, similar questions, Sanjay is saying I've invested more. I want to invest more in Gulak. How much can I invest? Already put 20 lakhs. So we have, I think, already covered that in the previous discussion. Think of Bharat is saying that he's an investor in year 6 and his investment strategy is investing every month in the small case, the minimum investment amount. What do you think of the strategy? So I think he's doing 24,000 every month, which is a fair enough strategy, I think. It's a good strategy. Bharat, so you can go ahead. Now, Srinivas is asking, with growing AUM of Gulak year 6, would the slippage possibly increase due to increasing rebalance orders by Gulak investors? Or is the impact on stock prices due to rebalance activity that happens due to other market players?
Yeah.
Mutual
See,
funds,
this
PMS.
would happen at some stage, but we are very, very far from that stage currently. We are actually very far from, and this is something that we are keeping track of, that what's the recommended size and in those specific stocks, how much is the daily trading volumes. All of this we are keeping track of, and we are currently very, very far from the state where it starts impacting the slippages substantially. Yeah.
Right.
But in the near future, yeah, I don't think this would happen.
Right. So another question is on the the snapshot I had shown for a person's investment portfolio. Aditya says, does the current investment field include brokerage transaction cost and small case cost? I am not sure, Vivek. Would you know that the current
Sorry,
investment,
what's the current?
the current investment field in the small case app snapshot that we showed to everybody of our investor? We had that performance comparison where different returns were mentioned and the
Yeah,
current investment was mentioned. So
yeah.
would that, I think it would not include,
No,
it
no.
would be
I
when
think
it
current
comes to the
investment
amount.
is the buy price of the current portfolio.
Yeah,
That's
yeah.
it.
Yeah. So any costs, etc., that have been incurred by you are not part of the current investment because that is your AUM. Those are your assets with which you've bought the stocks, your funds with which you've bought
Yeah,
the stocks. So anything, all the charges, etc., you should look in the cost calculator that we had shared, and that's separate. So that
yeah.
is not available in this current investment. Okay. What is the other question? So, Shashank had a operational question. Shashank, you should definitely reach out to our customer care team. He's saying that during last rebalance, his order was not filled, and then he repaired multiple times, which got failed, and the portfolio went into archive mode, that specific order. So the
Okay.
solution is to write to us and to write to small case. It
Small
seems to
case
be
as
a
well. Yeah, this looks
tech-related
like
issue.
a small case platform issue.
Yeah.
Yeah, but
So one important thing is that you should have the money. It should have been credited back to you. You know, there is 80 plus 20 rule. So 20% of the sell value will come to you the next day when automatically it should have repaired. But if it didn't happen, either the money was not present or there is some technical glitch of the small case platform. So please write to us as well as small case. We will help escalate the issue.
yeah.
Okay, I'm skipping all the questions we have already discussed in the webinar till now. Okay, this is done. Okay, so Priya is asking if we have a stop loss in our system at item or at portfolio level. And is the portfolio designed, is the system designed to for risks
No.
during black
Yeah.
swan?
Yeah, we do not have any specific stop loss either at portfolio level or at stock level. We don't have that
Right.
because these are long only investments. And these are for specifically for long term. So the idea is anyone who wants to stay invested in equities and grow his wealth using equities as an asset class, it is meant for them. Yeah. So I
Right.
don't think there's point of having at portfolio level, definitely not. At stock level, I've already covered that uh, it does not make sense to have it at individual stock level. It won't work well over long run. In few cases, it might.
Got it. So Himanshu is asking if these webinars can be kept on Saturdays or late Fridays. 6 p.m. Friday, most people would be working. So we can consider this. We can consider this, Himanshu. Although the webinars are available online on YouTube, and you can always rewind and see them. But let's see if we can do it at a different time. This time it was a Friday, Wednesday we couldn't, but usually we've kept it on Wednesday evenings.
Yeah, we'll plan one on a Saturday as well.
Yeah. Now, okay, Manoj says, I'm very happy with Gulak Year 6. What is the time to infuse extra money? Again, Manoj, we've discussed this. If you have funds right now, if you please go ahead and put in the money. Do not wait for the markets to correct because timing the markets cannot be done by you, me, Vivek, or anyone who claims they can do so. So do not wait, but just keep in mind that you should not put in extra money in our portfolio after the 10th, let's say, of a month, because 10th or 15th of a month, because you should be closer to the rebalance when you're putting in money, right after the rebalance or closer to sometime after rebalance, you should put in the money. Okay. Sudhanshu, okay, this I've taken. Someone is asking us to share the rebalance steps on small case, a demo video, if possible.
Okay.
So maybe we can talk to small case. I think they would have created something already. We can put it out on our website as well for
Yeah,
people to.
yeah. We'll do that.
Yeah. All right. Now looking at more questions. Okay, Vivek, this question came previously as well. Piyush Dedia says he's happy with Gear 6 so far. What is the logic behind having a stock with less than 1% weightage? This is just increasing the charges of moving in and out. There should be a minimum threshold, at least 3 or 5% is what he's requesting for. So, your views?
Yeah, see, I think we have obviously considered the charges of the transaction cost charges and other things. And what we have seen is these smaller stocks help us in stabilizing the performance overall. But this specific point, I think what he mentioned is the charges of moving in and out, which is the stock specific charges which uh, we need to pay. This is something I think we haven't considered really. So if we consider this I think we'll definitely consider this specific cost and see uh, what are the, obviously we know the benefits, but there is this specific cost. I think for one specific, it was 20 rupees per GS plus GST. So
Yeah,
this
every
specific cost
stock
we
will,
haven't,
yeah,
yeah. So
PP
this
charge.
we'll consider, and if we believe that the cost is more than the benefit, I think this is something that we should do. So we'll definitely look into this. Thanks for pointing this out. Somehow I also missed this. We'll look into this, and if it makes sense, we'll definitely remove these kind of very small allocations.
Priya Chandran says, I also trade in derivatives and hence would like to know how the rebalancing works because I pledge shares to get the margin funding from the broker. So I
Yeah.
think in this case, pledging of shares might not work out with at least the stocks that are present in small cases because it's churned on a monthly
No,
basis.
you can do it. Yeah, you'll be able to do it. There might be a case where one or two stocks are not, you're unable to pledge, but otherwise, operationally, you can actually pledge. Only thing is, during the rebalance, just before rebalance, you'll need to unpledge it
Yeah.
and then rebalance your portfolio and then pledge back.
Yeah.
So that's how you can do it.
So to answer your question on the rebalancing bit, Priya, what happens is every month we will give you, the platform itself will give you some buy, sell, and hold recommendations from us, which with a single click you'll be able to execute. So we do churn some part of the portfolio, those stocks will be sold. So like Vivek said, you will have to unpledge and then repledge after rebalancing every month.
Yeah.
Okay. How to switch broker from full service to discount broker. Now, I think that's if you want to do it, of course, you will have to open an account with a discount broker. There are lots out there. If you want to move your subscription, I did have a word with small case and now they've given this option for you to move your subscription from one broker to the other. So that option does exist. You will have to write to the small case support team and this can be taken care of. Okay. Kapil Arya says, I'm from Jaipur. When is the next meet close to Jaipur or Gurgaon?
I think Jaipur, Gurgaon to pass mein hi hai. He can travel to Gurgaon next
Yeah,
time.
he's saying when is the next meet in
Okay,
Jaipur
he's
or
planning to
Gurgaon?
come to Gurgaon only.
Yeah.
Okay, okay.
So like, when are we doing it next? Do you have any plans?
Yeah, we haven't discussed it, but yeah, we'll discuss. We can happen. Obviously, it's easier for us to do these meetups in Gurgaon. So
Yeah, yeah.
let's plan it out. Yeah.
We can do a meet and greet kind of a thing where we can just meet
Yeah.
in cafe or a restaurant. Someone else had also suggested that even if it's in a cafe or restaurant, that would be great. Maybe we can look at that option as well.
Yeah.
Okay, Shivaji is asking if we can share some details about PMS. How many shares do you buy and the charges?
Okay. In PMS, we have about 80 stocks at any point of time, but the top 20 stocks, it's heavily concentrated towards the top 20 stocks or so. And the returns again have been very good. You can just connect us connect with us directly or go to gulak.com. There's a PMS section. You can download the reports, the performance reports. Obviously, the performance has been great. Currently, we are offering very good discounts also. So your overall charges for the PMS would come out to be below 1%. So yeah, so do reach out to us, and you can go to pms.stadvisors.com, or the information is also available on gulak.com.
Right. Okay, a few more questions. So this question I didn't understand. Parmesh Chopra says to avoid booking losses, is it a good idea to remain subscribed to Gulak while buying and selling on our own on Zerodha following Gulak's advice? So I
So
think,
how would you avoid?
yeah,
Uh,
how would you avoid booking losses in this case? Anyway, it's not a good idea to take action yourself in your brokerage account because there are lots of stocks to buy and sell. It's operationally a very heavy task. But how is it helping you to avoid booking losses? That's if you can clarify, we can,
yeah, I don't understand. Yeah.
yeah. Okay. Is it a good idea to add stocks at all-time high in rebalance?
Yeah, I think these all-time high stocks would be primarily momentum stocks. It is actually a good idea. Momentum as a factor is very widely researched. And that's what we have seen in momentum. The stocks that are going up continue to go up, right? That's what the momentum factor is. So it is definitely a good idea. That's what we have seen in the past.
Right, right. Okay. Can you reduce the number of stocks? Mayur is asking.
Okay, so see, we really don't want to reduce the number of stocks because that will increase the volatility of the portfolio. The only new information which we have been ignoring is the charges of moving in and out of a stock that we haven't taken into consideration. We'll take that into account. But otherwise, I don't think we want to remove, we want to make it any more concentrated because we want to generate higher returns. I don't think we want to do it because it will increase the volatility.
Right,
Yeah.
right. Someone is asking if we keep STCG in mind while rebalancing.
Yes. So not while rebalancing, but while creating these portfolios, creating these algorithms, we do have taken into account the STCGs. So what we have otherwise done is we have reduced our churn so much that that it becomes a more longer term portfolio, so that your profits are coming in LTCG. So in that case, you will obviously avoid paying STCG. Most of your profits would be in LTCG. But at the same time, because we are rebalancing on maybe quarterly or every 6 months basis, what is going to happen is the alpha, the performance overall over the benchmark is going to come down. So your
Right.
taxes would come down, but overall returns is also going to come down. So we do have taken into account while designing these portfolios so that post taxes, post transaction cost, your returns are optimized.
Okay, so Shan Singh says he's new to Gulak, but only 4 months, but he's not seen any monthly rebalance. Is it because of small portfolio size? No, Sushan, that's not true. I don't know why you're not able to see any rebalance. You should reach out to small case as well as Gulak support, and we'll be able to help you. We give out a rebalance update every month, irrespective of the size of your portfolio. So please reach out and you should rebalance ASAP. You should not miss a rebalance at all. In fact, we suggest that within a week from the time we gave the rebalance update, which is usually on the first working day of a month, you should rebalance your portfolio. So please do reach out and get this going. Okay. Bhanu Prakash says, Vivek, that how much are we relying on algos? Sometimes algo may not find or participate in the race.
Yes, I totally agree. We are relying 100% on algorithms. Obviously, there's human oversight. We are tracking what these algos are doing on a daily basis, monthly basis, why they are underperforming, why they are outperforming. But you are correct that sometimes these algos might not work well, like we have seen in the past 2 months. But that's the case with even humans also. Even human fund managers, the style of investing they follow, sometimes that style might not work well. So I do not know of any fund or fund manager which is every month on month which will produce better returns than index. I do not know. So every fund or every fund manager or the style has its own pros and cons, and there'll be times where it works and there'll be times where it doesn't work. That's the case, yeah.
Right. Okay. So KG says, hi, I'm a recent investor and I do not understand the rebalance concept. Can you provide some more guidance and explain it? So sure, I think we can take some time to explain it quickly. What happens in rebalancing? Rebalance basically means we are giving you some advice which will impact in either some your portfolio basically changing. So at the beginning of every month, we give advice which you get on the small case platform by way of your portfolio changing. We will give you certain stocks to buy, sell, and hold from your existing portfolio. So when you click on the rebalance button that starts appearing next to your portfolio, you will see a list of all the stocks that are currently present, which of those you should hold and which of those you should sell, along with the weights with them. So the percentage weights and the number of stocks for each of that share. You will also see certain additional stocks that we have added for that month. Once you review that entire list of stocks, you just have to click on confirm and execute. By execute, I mean automatically small case, the broker that you are connected with through which you would have invested in the portfolio initially, small case will automatically take you to that broker. You will have to log in and you click on execute. It will be a self-iterative process. You will be able to see a self-explanatory process. You'll be able to see the steps. So you just place those orders in one go. Now, a related question by Aman says, is it 80% used at the same time or all 100% happens? To add to what I was saying, SEBI has a rule which says that if today you are selling stocks worth 100 rupees, you will get only 80 rupees. You won't get full 100 rupees as money back into your brokerage account. So what happens is on the day when you are sitting to rebalance, you will sell stocks, say, of 100 rupees. You will be able to buy the additional stocks only worth 80 rupees. So for that 20 balance rupees, you will have to rebalance on the next day. It can be automatically done if you give it the permission to do so. So rebalance, just to summarize, is just a way for you to buy, sell, and hold your existing portfolio, create the new portfolio basis Gulak's advice, and 80% can happen on the same day, 80% buying. The rest 20% will happen the next day. Vivek, if you want to add anything to this.
No, I think you have explained it well.
Okay, all right. So I hope this is clear. Okay, he's had a follow-up question. Any ideas that you are going to introduce AI, or is it there already? AI, not in the rebalancing process because it cannot be done. SEBI says that as an investment advisor, we have to ask you to click a button, give your go ahead to execute whatever advice we are giving to you. So that manual process would always be there. But in creating the portfolios, of course, we are using algos. So Vivek, over to you for that.
Yeah, see, we are AI, the definition is not AI or even ML, the definition is not very clear.
Yeah.
Our researchers definitely are working on the cutting edge, and they are very up to date about the new developments happening in this specific space. At times we are able to use it to our advantage, at times we are unable to. Like one of the things is how can we keep track of, let's say, if specific news comes out, or there's some news or some rumor in the market, and if that is impacting stocks, how do you take that into account while rebalancing? Right. And what we have seen is we have done our study. So we definitely don't want to take any human intervention. But what we want is have a systematic way of using that information. Right. And the systematic way is let the algos crawl through the internet, read whatever is going on about a specific stock, and then see whether how much can that specific news or what people are talking about can impact, whether that is a positive or negative, and then use it. Right. So it's kind of something what is known as social media sentiment. And this is what we have seen, and we have tested it out. And what we have seen is it is not really adding any value to our portfolios, right? So the idea here is we are trying out newer ways to improve our portfolios, whether that is under AI or ML, and we keep improving it. Yeah, that's what I have to say, really. Nothing specific about AI or ML, but we are definitely, our researchers are well equipped to use these newer technologies in our portfolios. That's what I would say.
Right. Okay, Priya is asking, are the stocks always same irrespective of the amount of fund invested? The weightage, the list of stocks and the weightages remain the same. But of course, depending on the size, the actual number of stocks, actual number of shares for each company that we are buying would differ. But the weightages will remain the same.
Yeah.
Pankaj, can you explain how PMS service works briefly?
Okay, so PMS is anyone who wants to invest. It's similar to small case Gulak portfolios only. Only thing is, the difference is one is the minimum investment size is 50 lakhs. And the second difference is we are taking care of all the rebalancing. So you don't need to rebalance. Third thing is it's more diversified than Gulak portfolios. I think these are the main differences. Another difference is obviously apart from the long only, we do have a PMS strategy by the name of iAlpha, which is meant for very conservative investors. So investors who are doing, let's say, FD. For those kind of investors, we have a product which is much better than FD, right? And you can actually mix up these two, the equities and the debt part, and create your own portfolio. So we have multiple other products that can be that you can invest in through this PMS. So one is the size, the rebalancing, the diversification, and another strategy that we have in PMS that you can invest. Hello, Eesha, you there? I think we lost her. So let me take up the questions. Can you? Okay. PMS I've covered. Okay, you're back. Yeah, Eesha.
Yeah, Vivek, I'm not sure if it was my internet. I'm so sorry. Okay, so you've covered this question. Should I move to the next one?
PMS. Yeah, we can move on to the next one.
Sure. So Srinivas is saying he's contacted ST for investing in PMS but hasn't heard from us. So maybe we can, Srinivas,
Okay, I've noted your name, Srinivas. We'll get in touch with you.
Yeah. All right. Deepak says, is it possible to calculate the return deducting STT and exchange charges in the small case app? Yes, Deepak, of course. I mean, you can look at the investment amount. What happens is, I remember a similar question was there a while back. So the current investment amount will show you how much you've put in, excluding the STT. So let's say you would have put in 100, but current investment, you are seeing only 99. That means that 1 rupee was actually used for STD brokerage, etc. So you should look at that, and I can confirm, we can confirm, and we'll let you know next week in detail what all these fields mean. We will confirm with small case, but our understanding is that current investment will exclude any money that you would have paid towards brokerage charges, etc. You can rewind and see the chart we showed in the cost calculator was actually including the STT, etc. as well. So there are two places where the place where you see your returns, you will see current investment that will be excluding your charges. But the place where you can see the cost calculator, that will include all kinds of costs and all kinds of profits that you've made and show you one picture. So if you want, I can maybe Vivek quickly share my screen again for the audience and show what I'm talking about. Just a moment.
I think that was in the first 15 minutes.
Yes, that was in the first 15 minutes.
Rewind
Vivek, I am not the host. If you can make me the host, please.
Yeah, one second. Let me quickly share that my screen.
Sure, you can share it. It was, I think.
Can you see my screen?
Not yet. Yes, I can see it now. I think it was slide 16 or 17. Yeah, this one, Vivek, 17.
Yeah. Yeah.
So if we see over here on the right side, your total investment breakup includes the subscription fees you've paid, the transaction charges you've paid. Everything is included over here. And on the left, you will see your returns. So this basically shows you what are your annualized returns after accounting for all the charges. So it takes as denominator your overall costs plus your investment amount to give you the returns, including the charges, taking into account the charges. So you can have a look over here too. I hope this answers your question. If you still have any question, we'll be happy to cover them in detail. Uh, if you can share a question in advance in our next webinar, and we'll try to get you the answers. Okay, moving on quickly. Okay, so Parmesh has given clarity, Vivek, when he was saying that he can avoid booking losses by using his own account. He's saying that can we avoid losses by not selling the stocks? That's what he says, which are giving negative returns, holding them rather than executing their sell-off in rebalance. For this scenario, is it good to manually transact? So I think over here, definitely not. He's saying that he will hold on to the stocks that we have recommended as sell, and he will only buy. So that is definitely not recommended because we are creating a portfolio taking into account several parameters, and our portfolio is optimized for risk and return. So if you play around with the constituents of the portfolio, there is no guarantee you will get any. Otherwise, also there is no guarantee, but then you are just doing your own portfolio. That's not Gulak's advice to you. So if you want to invest in our portfolio, you should be as close to what we are recommending. And like we mentioned initially, if we are asking you to sell specific stocks, that's because we feel there is a better opportunity elsewhere. So just follow what the advisor says, whether it's us or any other small case manager. You should not tamper with the constituents.
Right.
That's what's advisable. Okay. Aman is saying, can we automate the rebalance? How does the repair work automatically for rest 20% of the money? Aman, that is a feature now that's available. I have been personally doing it for my Gulak investments. I execute on the day of the rebalance. So 80% of my buy value gets executed. Rest 20% automatically happens on the next day. So I would request you to reach out to small case, see how you can enable it for your account. If there is any need to enable, you can just get in touch with them. RHC is saying, do you have mutual funds on small case? Vivek, what are our plans?
And that is something that we are planning, we are researching. So pretty soon you're going to see mutual funds as well, mutual fund model, which we have been planning to do for a while now, and we'll soon roll it out.
Right. Okay. Rohit is asking, discount coupon on Gulak year 6 for one time, or it gets applied at every renewal? No, Rohit, this is only one time. So first time when you, whether it's a 3-month or a 6-month plan, the first time you subscribe to us, the coupon will be applicable then. From the next time onwards, we are hopeful that you will like our services and you will continue without the discount also. That's the idea. Is the rebalancing going to be the end of this month going forward, or move to first business day again?
Yeah, this will most likely be the first business day of the month. Yes. But we'll definitely update it maybe a week or 15 days in advance. We'll update it. But the most probably it is going to be on the first day, first working day. And first for May, it is first working day is a Wednesday. So yeah, it will be most likely on Wednesday.
Okay. Sandeep is saying how much returns may vary because rebalancing timing as morning, evening, or next day, and adding more funds as lump sum.
Yeah, see, from our research, what we have seen is 1 or 2 days of delay does not impact the returns really so much. And after that, your returns start falling down, right? So yeah, if you're able to rebalance in the first 2 days, it's pretty good. And if, as I told you, if your portfolio is slightly larger, try to rebalance in the first hour or in the last hour of the markets.
Okay, so a few questions on PMS, Vivek. What is the CAGR, and then how much of value usually goes into rebalancing? So I think we're talking about the churn.
Yeah, so the churn is obviously because it's much larger portfolio, the churn is definitely lower than Gulak portfolios. And the first part was how much
Is the CAGR in PMS?
CAGR. Okay. CAGR, see, if you see CAGR is lower than Gulak because of two reasons. One is in Gulak, the returns that you see on small case, uh, those are gross returns. After that, if you take into account the fees, the transaction cost, your returns are slightly lower than the actual returns that you see, right? Whereas on the in PMS, what we report is the net returns after transaction charges or after all of these charges, right? So if you so though that like to like comparison is not there, I can tell for last year, Gulak on small case platform returned 70%. Those are the gross returns. Again, there's going to be the net returns would be lower depending on your brokerage. In PMS, we are not charging any brokerage. The brokerage is zero. And last year, the returns were closer to 60%, right?
Right. A question by BK, he's saying, do you
Yeah.
suggest to invest with the current weight or at the ideal weight, given the weightage changes over time, and this is for additional investments?
Do you suggest to invest with the current weight or the ideal weight? Okay, given the weightages.
For additional investment, he's asking this question.
Yeah. But this is, I don't think we have a control over this.
Yeah.
Because this is being decided by the platform.
Yes. Yes. Based on what we have originally given, for every
Yeah.
additional investment, there is a rule that they have used. Now, if
Yeah.
you want to manually BK, do anything about it, uh, I'm not sure, Vivek. Do you think it's an ideal thing? It's a good thing to manually
No,
uh, invest as per
it's
the
not
weights that
really a
you.
good thing to do manually because there are operational hassles after you manually do it. You need to report it to small case via an Excel update. I don't
Right.
really know the exact process, but that's what it is. So operationally, it's a big hassle to do it actually, and that's why from our side, we recommend that whatever is being suggested there, you follow it.
Right. Okay, so I think last two questions are there, which we can
Yeah,
take here
yeah,
near
yeah,
the end
sure.
of the questions. Sanjay is asking, can we place stop loss in stocks? I think we discussed that's not
Okay,
possible
this has
in
been discussed. Yeah.
construct of the platform. And Shashi, too much rebalancing by Gulak. Why? Question that we received in the
Yeah,
past.
Shashi. So I think this we have been discussing for a few months now. Our team is working on this. This is one specific area where we actually want, if without impacting the returns or the risk, we are able to reduce the churning, we would definitely do it. And this is one core area of research that we are currently working on. And this you might hear from us soon, but it's still not final, right? So yeah, this is something that we are actively working on. If and when we feel confident about rolling that update to this specific portfolio, to this specific algorithm, we would do it. But this is high on the priority list for us that we want to reduce the churn. Yeah, this we are aware of.
Perfect. I think Vivek, we are at the end of all the questions. Uh, can we,
Great.
okay, last question just came up by Gokulesh. Can we change broker on our subscription? Yes, you can. This has recently been introduced by Small Case. So would request you to write to their support team and they will do this for you. You can also write to us so that we can help escalate. For our subscribers, we can do that. Yeah.
Okay.
Perfect. All right. So thank you so much, everyone. Thanks a lot, Vivek, for joining us. Hope everyone has a great weekend.
Thank you, Isha. Thank you, everyone. Thanks a lot.
Bye.
Bye.